Hey everybody, Smart Silver Stacker here. Hope you're doing well. Welcome to the live stream. We've got silver today back over 51 bucks. So a fairly significant technical move. We're going to take a look at the chart. We'll talk about the silver supply, which is actually shrinking. Take a look at what the Fed's about to do, because very well could be the factor that triggers the next breakout in silver. But I want to start with this post from X from November 21st, which shows that there was a false breakdown in the silver price on Friday. We had, I'll enhance this picture here so you can see it a little better, but you can see this is silver futures. We had this triangle consolidation, and on Friday the silver price dipped way below that, but then finished back within the triangle, and that candle there that looks like a hammer, that is a very bullish sign. And I had posted this on Friday. Follow me on X at @StackSmarter on X if you'd like to see posts like this. This turned out to be a very bullish sign, as I had mentioned in this post. If you look at today's silver price, well, this is the spot chart. Let me look at the futures. Yeah. There's that hammer candlestick, and we got a nice green candle today, up almost 2%. Looks like we're on the verge of a breakout to the upside of this consolidation. So from a technical standpoint, silver's looking very good here. This is, again, silver futures. If we go to the silver spot chart again that we just had pulled up, you can see that we've got a similar consolidation. This one is not a symmetrical triangle. This is an ascending triangle, a very bullish chart pattern. Same deal on Friday. We had the false breakdown, and today, here we go. Nice green candle back well within the consolidation form here. And from this candle, it's looking like, or this triangle rather, it's looking like maybe we'll get a breakout to the upside by year end. And, you know, where will that take us? Well, maybe $60, I would say, is the next target, right? We're in uncharted territory once we're above 54, at least in terms of the nominal price for silver. And things from a technical standpoint are looking very good. If we can pull up the chart of the SLV, the paper ETF that tracks the silver price, then we can get volume data. For whatever reason, on TradingView here, there's no longer volume data on the silver spot chart. If we go to like the 4-hour, we can see it, but I wanted to look at the daily. So we can use the SLV as a proxy for silver in terms of volume here. And this is an indicator that we have not looked at extensively on the channel in the past, but this is the accumulation distribution. And to kind of give you an idea of what the accumulation distribution line represents, it measures whether money is flowing into or out of an asset. It looks at where the price closes within each candle's range, and it weights that move by volume. So if we close near the high end of a candle, and these individual lines are the candles here, on strong volume, then that would be accumulation. The line rises. If we close near the low on strong volume, that's distribution, and the line falls. So what this suggests, and you can see that this line is significantly elevated if we go back, that means that based on the volume data and the trading activity in the SLV here, there is a net accumulation going on. So investors are loading up on this paper derivative, and that means that I suspect we will see a breakout to the upside. I mean, this is sort of a symmetrical triangle here, which could go either way. But the accumulation distribution tends to support the idea of a breakout to the upside. And I'm sure if we could see volume data on the spot chart, you see when we try to look at volume here, it looks all weird. If I go to the 4-hour, though, then for whatever reason there's volume on the 4-hour, it's the same deal, right? Accumulation distribution very positive when it comes to the silver spot price. Now, looking at this 4-hour chart, you can see that here on this previous spike up, we had gotten very overbought on silver, and it's similar to what you see on the daily chart. Let's turn this weird volume off for you. we had the initial run up to 54 on the daily, got us also very overbought on the RSI, but that has had plenty of time to cool off since then. So silver is really stacking up for a big breakout to the upside. Now, what are some factors from the fundamental standpoint that support this? Well, here's a report from the Silver Institute from November 13th, and there's a lot of information here about what's going on in regards to silver investment, physical silver supply, etc. One thing that I want to draw your attention to is that overall, 2025 will see the fifth successive deficit. Now, it is lower year over year. That means that the deficit has been declining over time, but it's 95 million ounces. Now, there's about 1 billion ounces produced every year. So the shortfall, pretty significant here, right? It's about 10% of annual production, the shortfall. This is just the amount of physical silver that is being consumed versus what is being produced and also recycled, right? So it's production from mining and from recycling. So what we have here is investor interest, right? As demonstrated by that accumulation distribution line that we looked at, and a shrinking supply of silver, physical silver that is. Now, in a recent video, I had referred to the silver market as tiny, and I had mentioned that that is why we see volatility in the silver market. And I had a comment that pointed out to me that the paper silver market really is not that tiny. We'll kind of put this in perspective, right? So silver has a market cap here, as you can see, of about $2.8 trillion. So no, that's not super tiny. It's a bigger market cap than Amazon. But, you know, compare that to gold, and it's about 1/10 of the gold market. Now, the gold market is one of the most liquid, largest markets in the world. So to be fair, everything is somewhat tiny compared to gold. But this is why you see a lot of volatility in silver versus gold, right? That's why when the metals underperform, then you tend to see silver doing worse than gold, or rather silver underperforms gold when there's a bear market, but also in a bull market like we're in now, silver tends to outperform gold because it's a smaller market. And then when you're looking at the physical market, you know, $2.83 trillion, that's pretty incredible. When you think about annual production, as I mentioned, being about 1 billion ounces, so at today's prices, about $51 billion worth of silver produced every year, and you've got all this paper silver sloshing around, the actual physical underlying metal is a tiny percentage even of the paper silver market. It's something on the order of, you know, hundreds of paper ounces of silver that trade for every single physical underlying ounce. And that's why you want to get physical metal, right? Or at least that's why I like to get physical metal. That's why I like to stack. That's why I have been stacking, even with silver near record nominal all-time highs. I've been steady stacking. I mean, you can just see the unboxing videos on the channel. I've been accumulating more physical metal. Now, also, if you were of a mind to do so, it's not financial advice, not telling anybody what to do, but if you are stacking, SD Bullion just launched their Black Friday deals. So right now they've got junk silver under spot. They've got some fractional gold coins, these 20 franc Swiss gold coins. You can get them at spot. They had some 2 gram gold bars at spot, but they sold out really quickly. So I'm sure that throughout the week they'll be posting some additional deals. Well, I'm not sure of that, but I would expect they would. That's typically how they do things. But already there's some pretty fantastic deals out there. Also, I do really like these pre-1933 gold coins. $49.99 over spot. I mean, for a slabbed graded coin that's likely, you know, 100 years old or close to it. So if you're in the mood to stack, now would probably be a good time to do that, being the Black Friday week with all the great sales, etc. And, you know, physical metal, that's where it's at, I think. That's where we're going to see even more appreciation than the paper derivatives, although I think these are going to do pretty well also. Now, gold, taking a look at gold here, this is gold spot. Also, you might note, in a very bullish looking consolidation here, right? This is what gold does. It consolidates and then it has these big moves. I mean, I can zoom out Oh, and by the way, this green line, what this is the 200-day exponential moving average. So, the reason, part of why gold from a technical standpoint needs to trade sideways here is because it gets so far away from the 200-day moving average that, you just need to cool off for a little bit. Doesn't mean it needs to correct, it means it needs to consolidate and let this move up. So every day that gold trades sideways, the 200-day moving average catches up to it a little bit. But you can see that this is kind of a pattern here with the gold market. You get these consolidations, and then they break higher, right? And there's a lot of reasons to believe that this bull market is just getting started. And there's several of these triangles here. Now that's kind of an ugly one. Maybe I'm reaching a little bit, but you get the idea. I mean, there's these consolidations. They're not always perfect. We can kind of extend that line here, and I'm just doing this live, right? But you get the idea. They consolidate, trade sideways. The metals both do this, and then they move higher. And this bull market is just getting started. If you want to know one reason I think that this bull market is just getting started, let's take a look at this. This is a chart that we look at from time to time, but this is the Dow to silver ratio over at macrotrends.net. And this is basically just the Dow Jones compared to silver, right? So back in 1980 at silver's peak, when it hit $50 for the first time, it took about 23 ounces of silver to buy a share of the Dow. And then in 2011, when it hit $50 a second time, it took about, at the low, let's say 278 or so ounces of silver to buy a share of the Dow. Where are we at right now? Well, this is a logarithmic chart. So we're about at 1,000 ounces, actually just under 976 ounces to buy a share of the Dow. So even though silver is hitting that, nominal high of $50, it's still, when you price it in other assets like paper assets, silver is still very cheap. And the same thing goes for gold. Despite the fact that gold has surpassed its inflation-adjusted all-time high, you have to understand that inflation number, we're using the CPI when we talk about that, it really understates the amount of inflation. And when you measure gold relative to other assets, also very cheap still, but silver even more so, right? Silver is cheap even relative to gold. Now, one of the factors I mentioned, the Fed, that's going to trigger, I believe, the breakout is what's coming in terms of monetary policy. Now, this is interesting, right? This is the CME FedWatch tool, which tells us what is forecast by markets to occur at the next Fed meeting. Now, right now, see, we're almost at an 80% chance of a rate cut at the upcoming December meeting. Now, the interesting thing about that is that just last week, the odds of a rate cut, you can see exactly 1 week ago, were about 42%. So we're swinging back in favor of more easy money coming our way. Now, I mean, you've already got silver at record nominal highs. The stock market, we've had a bit of a correction. And that is, I believe, why we are now shifting towards easier monetary policy. And that's going to be a trend, right? If you start to see the stock market sell off, if you start to see a correction, and we have had that over the past week, there has been a bit of a decline in paper asset prices. And I believe that is contributing to the promise of more easy money, right? This is the Fed put. So, if we start to head into a recession, if we start to see a correction in asset prices, if we start to see the value of homes declining, if we start to see the value of the stock market declining, the Fed is going to come to the rescue, right? I am convinced of that. I would be very surprised if they just let things crash. So even if there is some kind of a pan sell-off event and, gold and silver get smacked down, which is always a possibility, right, in this environment, like volatility is kind of baked into the cake as we enter into this late stage of our current fiat system, the Fed's going to come right in here and pump things back up. That's why, I stack today, some silver maybe, at $51. If it drops down to, let's say, 45 over the course of the next week, right? Like the last correction, we saw silver drop down to 46. I'm not sweating it at all. The number of ounces I control still is going to stay the same, and it's going to be growing as I, continue to earn fiat. I can put that into physical metal because long term, I am convinced at least that the silver price is going to be going much higher and that there's a lot more dollar debasement ahead of us. If If you want to know why the Federal Reserve needs to intervene here and keep interest rates lower, and why I think they're going to have to not only end their program of quantitative tightening, which is scheduled to end here in December, but I think they're going to have to start buying the U.S. Debt from the Treasury directly again via quantitative easing. I mean, all you got to look at is this chart. I know we've looked at it a bunch of times, but this is probably the most important chart out there when it comes to dollar debasement and monetary policy. This is the federal government current expenditures and interest. This is a number that, until the Fed meaningfully decreases interest rates, is going to keep growing, right? And it's predictable. We've got $38 trillion in debt and growing at a fast pace, right? We got the big, beautiful bill. We got big deficits. We got the government doubling down on spending because, hey, what happens if they realistically or meaningfully cut spending? Well, it's like instant recession, right? The economy is dependent on massive amounts of borrowing, pumping money into the economy, quote unquote, stimulating, Keynesian dream. And if that stops, the bottom will fall out of everything. So they're not going to let that happen because politicians can't do that, right? And the Fed is just, another branch of the government that basically, I mean, they say they're independent, but they're probably really the ones running the show. But they can't allow that because, they don't want mobs with pitchforks and torches coming for them. So it's very likely that the Fed is going to continue and persist with their easy monetary policy here. And, there was another thing I wanted to mention. If you're into physical assets, physical gold and silver, I did a video recently. It did not get very many views, but there's a link down in the description of this video. And it's a way that you can get your hands on some free silver. I'm not going to get into it in this video, but it's not really free. I mean, you have to do a little work to get it, but it's kind of a way you can get paid for a very easy form of work, signing up businesses to accept sound money, and you can get some silver. So anyway, if you're interested in that, check out the link down in the description, or just go to my channel and look at the video that's titled like how to get free silver. It didn't get a lot of views. I don't know why exactly that was. The algorithm didn't care for it. Maybe people weren't as interested as I thought they might be in that, but I think it's worth a watch, and it's kind of an interesting thing. So as an aside, check that out with the link down in the description. But yeah, moving back to silver here, we've got a shrinking supply, we've got a debasing dollar, we've got a very bullish technical picture here. The overbought condition is done. And, when it comes to gold, the overbought condition that it was in at the recent rally where it hit over $4,400 for the first time in history, this was like the most overbought that gold had been, I think, in decades. So it's pretty normal that we had the correction and the consolidation here. And again, this is just the pattern that we've been seeing, right? And I expect that what will happen is we'll get a breakout to the upside. Maybe we get $4,500 gold. Maybe we get $5,000 gold, somewhere in that range. And it'll probably trend sideways again. This will stop happening, I guess, when the bull market is finishing up and we get some kind of a blow-off top, which is what one would expect at the end of bull market. But the thing is that that's kind of what we would expect under normal market conditions. So we can all anticipate that. And maybe when that happens, you get a decline in the gold to silver ratio. My strategy then would probably be to switch some silver into gold if we see a big run up in silver. But you got to wonder, is there going to be some kind of an end to this bull market that you're even going to have a meaningful exit into fiat currency, right? We've got the dollar now, which is potentially kind of nearing the end of its life cycle in its current form. And that's nothing new, by the way, for monetary history in the United States. There have been defaults, resets, dollar restructurings. The last one was in 1971. That was when Richard Nixon ended the convertibility of the dollar directly into gold. There was another revaluing back in, I don't know the exact date off the top of my head, but it was FDR who, that was when he did the gold confiscation, and he paid the current price of like $20 an ounce, and then he revalued it to 35. So basically just, stole from everybody to help finance the excesses of government. But there could potentially be some kind of a reset for the dollar ahead. And it's kind of what you would expect when you see charts like this, right? Skyrocketing interest on an out of control national debt. This is sort of like terminal phase stuff. So I don't even know if, let's say we did get some kind of a blow off top, gold goes to 20 grand. Do you really want to sell your gold for fiat dollars when gold's $20,000 an ounce? Does that sound like a good idea to you? I don't know. I mean, it could be. I guess that it's possible that it could hit 20 grand and then, come down and we could have another 50 years under the current monetary paradigm, but that seems unlikely to me. It seems like a lower probability event than we just get some kind of a monetary reset again. The last one, as I mentioned, was 1971, and then the one before that was about 40 years before that. So now there's been, almost 6 decades now between us and the end of dollar convertibility into gold. And, this is also the first time that the whole world has been on this like purely fiat dollar standard. That's unprecedented in history, that the global reserve that everybody relies on is just, a fiat currency backed up by nothing. So I wonder, leave me a comment if you're watching this later or put it in the chat now. What is exactly the exit strategy for precious metals? It's a nice place to hold your wealth, and I suspect that gold and silver will continue to be stores of wealth for, the foreseeable future, just as they have for thousands of years. But what's the exit strategy? One thing is I'm overweight silver. Could flip that silver into gold, I suppose, but maybe it'll be other assets, right, that are not fiat currency, because the idea of selling and, just sitting on a pile of devaluing fiat currency doesn't really appeal to me. But maybe there will be other things, right? Businesses, stocks, ownership of real things that you can transfer your stored wealth from precious metals into when we do get that top, if we get that top. I just, it's kind of hard to know. And people ask me this question sometimes, like, okay, but if the dollar's, going to zero, what am I supposed to do with my gold and silver? And it's like, well, kind of cross that bridge when you come to it. It's just better to be in that position than to say, hey, what do I do with this, pile of kindling that I'm carrying around in a wheelbarrow, like in Weimar, Germany? Like, yeah, you can wipe yourself with it, I guess. But yeah, leave me a comment. I'd be curious to know. I know you're a very intelligent audience, and there's a lot of you who have probably given this some thought. So I'd like to know what you think about exit strategies for gold and silver. Another option, potentially, could be collateralizing borrowing with your gold and silver, right? So you got a nice pile of gold and silver. Maybe you can use that as collateral to get a low interest loan, and then you can use that to buy cash flowing assets, and then you can use the cash flow from those assets to pay off the loan. Then you got the assets and your gold and silver. Just some thoughts. There's no way to know exactly what that strategy will look like until you get to that point. It's like, I think it was Mike Tyson who said everybody's got a plan until they get punched in the nose, right? And these markets can definitely punch you in the nose, throw you curveballs, give you the unexpected. But I think that one thing that we can count on is continued dollar debasement. And that means, in my mind at least, not financial advice, but that the metals will likely, in nominal terms, continue higher, and also that dollar debasement ultimately will lead to the metals appreciating in real terms relative to other assets. Again, like the Dow Jones. This is just a convenient example. The Dow Jones still pretty expensive compared to silver. Silver very cheap relative to those paper assets. And I think that there will be a time when those things switch, right? And, that'll maybe be the time to acquire some other assets. Anyway, leave me a comment down below to let me know what you think about these topics that we covered: the shrinking supply of silver, the Fed's imminent resumption of rate cuts, even though we are at record highs in the metals, and also the M2 money supply. We didn't look at that chart right now, but that is also at a record all-time high here as the Fed is embarking on their program of cutting. All very bullish for the metals. Not necessarily a great sign for this economy, but hey, it's like, you do what you can. You focus on what you can control, and I can't stop the Fed from destroying the dollar. I can't stop the politicians from, selling us down the river. But what I can do is try to acquire assets that will benefit in this scenario that we find ourselves in. So that's what I'm doing. But anyway, leave me a comment down below to let me know what you think. Thanks for watching, everybody. Stay safe and happy stacking. If I don't talk to you before Thursday, happy Thanksgiving. Hope everybody enjoys their holiday. And I will catch you next time. Stay safe and happy stacking, everyone. Smart